This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, Rich Dad Radio Show, the good news and bad news about money. And unless you're sharing a bunker with Biden, hiding in a basement somewhere, the big news today or the last few weeks, or it's been actually went around now, is the leaks are out, is that Warren Buffett, I think he invested $560 billion or $1 million or some ungodly number that none of us use to buy shares in Barrick Gold Mining. Now, the reason that's important is not so much what he bought. The question is, what did he dump? And he dumped all airline stocks, and he dumped banking stocks, including, J.P. Morgan and Goldman Sachs. So the question we have for you today on the Rich Dad Radio Show, what does that mean to you? If he's dumping airlines and he's dumping banking stocks, but he's buying Barrick Gold Company.
And he used to talk bad about gold, right? Or not bad about it, but...
Yeah, for several years he's bashed it.
So let me give you some quotes from Buffett, just so you don't doubt my word here. This is Warren Buffett. Gold gets dug out of the ground in Africa or someplace. Then he melts it. Then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head, Warren Buffett. And then Munger, his partner, who is 96, Buffett turned 90. It's a much better life to work with businesses and people engaged in business. I can't imagine a worse crowd to deal with than a bunch of gold bugs. Okay, so he's Buffett is 90 and Munger is 96. This is my point of view. I'm not criticizing them, although I've really never agreed with they're obviously very rich, but I would rather not give them my money to invest for me. I like doing it myself. So that's the difference. So if you like just turning your money over to two old men, you can do that. But that's no fun. It's just no fun. I mean, you can't lose your own money. They've lost money. So they lose your money for you? That doesn't make sense to me. But anyway, so again, there's two old men who've changed their minds. And the question to you is, what does that mean? Any comments, Kim?
No, well, I'm excited to get on with our guest this morning because I do find it very interesting that Buffett has talked down about gold for all these years, and all of a sudden he's buying. So that definitely is a big signal somewhere, and we're going to find out more about that from our guest. And our guest is one of the best educators of the economy and central banks and all of this that I've ever come across, because George Gammon keeps it so simple that even I understand it. And George,
he draws pictures.
Yes,
I can understand
I love
pictures.
that.
I got the whiteboard behind me.
I love the whiteboard. I love the whiteboard. And George Gammon, he's an American real estate investor, entrepreneur, and, quote, macro addict.
But you're now living in St. Bart's, and then, I want to know, are you fleeing from the law?
But let me just say first, too, he's got a great podcast, and you guys got to watch the podcast. It's called The Rebel Capitalist, and it's a fantastic podcast, and you'll learn so much.
And that's where I get my information from. So George, although much younger than me, is one of my best teachers. So George, first question is, are you an outlaw? Is that why you're hiding in St. Bart's?
Well, it depends on how you define outlaw. But now I'm here in St. Bart's because I just looked around the world and I wanted to find the place with the most amount of freedom, where I could go to the restaurants, the cafes, I could go watch UFC, I could go to the gym, I could do all these things.
You have to wear a mask.
I was sick and tired. I was sick and tired of dealing with that. So St. Bart's was the best place that I could find. But going back to your comments on Buffett, I think what's really interesting, and I totally agree that it's much better for people to control their own finances if they know what they're doing. And right now, I think more than any time in maybe history or American history, I think you've got two choices. And that's, you can either be prepared or you're going to be a victim. And by looking at what Buffett is doing, I think it's important for the average person to understand the concept. So, okay, first and foremost, he's selling banks. Well, you could say there's a lot of downside risk with loans, especially commercial loans right now, with what's going on with the virus. But you could also say if the Fed starts to, and I'll unpack this a little bit further, I'll use some technical terms right now. But if the Fed decides to peg the yield curve, so that means they won't allow interest rates to go up, even though the rate of inflation is going up, then that really hurts the banks because they're getting paid back with these cheaper dollars. They can raise interest rates, but there's substantial risk that, let's say, there for inflation. So that's not good for the banks. And then you say, okay, well, what's cheap right now? Buffett always likes to buy what's cheap. And if you look at commodities going back 120 years to 1900, I just listened to an interview with Jim Grant where he went over this, and commodities relative to financial assets, more specifically the stock market, are at 120-year lows. So if you're a value investor, I think that you're selling what could have some future problems with inflation if you look at the macro picture of what's going on with the Fed, and you're buying a hard asset that's a hedge against that inflation that currently right now, especially relative to M2 money supply, which we can get into later, is extremely cheap. So I think that's the biggest takeaway for the average investor.
Right, but you got to use language that satisfies me here, George. A little too complex here.
Okay,
So
well, let's start with the government debt.
So let's go to airlines. So look, he's dumping banks, okay? But the other reason I read, the reason he's dumping banks is people can't pay back the loans anyway.
Yeah.
Do you know what I mean? So that's a huge problem. And and I was going to have you on to talk about the shadow banking system in the repo market, which the Fed and Treasury took over. But the other question is, why would he be dumping airline stocks and you're hiding in St. Bart's?
Well, I think he's dumping airline stocks because they're going to have a lot of pressure. I mean, when I flew from Medellin to Fort Lauderdale on that humanitarian flight we were talking about earlier, the flight was maybe a quarter full. And if you're an airline, as you guys know, the margins are incredibly thin. They don't make much per flight. Only maybe a couple seats provide the profit, maybe 3 or 4 seats. It's just that they have so much volume, and that's where they make the money. So if you've got all these flights going around that are half empty, I mean, you got real problems. So I think he's seeing long term, if the governments continue with these lockdowns and these draconian measures, that's going to be very, very bad for airlines, especially if they're not allowed to buy their stocks back. And I think that's what he's looking at.
So what's a humanitarian flight? They have a Red Cross on it or something?
No, it's just like a normal airline flight. They just do them back and forth twice per month for people who have family in the United States that are U.S. citizens, or vice versa, Colombians that were stuck in the United States that wanted to get back home to Colombia because the airports there were shut down at the time. I'm not sure how they are now, but I think it also goes back to the debt. And you guys, I'm sure, have talked about it. The United States has $26 trillion in debt, but what most people don't realize is going back to 2000, let's call it from 1776 to 2000, the United States racked up about $5 trillion in debt total. And in the last 20 years, we've tacked on an extra 20 trillion or 20 plus trillion. And so it goes back to your question you're talking about, Robert, and that how do you get out of that mess? Well, you can tighten the belt, and we most likely won't do that. You can inflate away the debt, so you're paying it back with cheaper dollars.
And George, when you say tighten the belt, you're talking, they call it austerity, right? Everybody has to kind of cut back on their consumption and cut back on what happens.
Yeah, well, if you look at that debt, is that the fact that we've overconsumed, and basically that's what debt is. You're just pulling consumption from the future into the present. So we've overconsumed as a country for literally decades. And so at some point in time, the only way that you can meet an equilibrium point is if you underconsume by the same amount or more that you overconsumed.
And you have some charts here I want to show people. It's not only is the debt now excessive, but we're running, and we'll post this on the site here. What does this chart mean? Is that we're going to keep printing more money or debt,
Well, that's a real mind blower. If you look at 2020 right there, you see that it's projected that we're going to run over a $4 trillion deficit in just 1 year. So that means that the additional debt that the federal government is adding to their balance sheet, that we, the taxpayers, are responsible for in just 1 year, is over $4 trillion. Now, to give you some context, going back to from 1776 all the way to, call it, 1990 or in the mid 90s, that we racked up $4 trillion in debt in total. So you say, okay, we went 200 plus years and racked up $4 trillion in debt, and now we're doing that in just 1 year. In just 1 year, we're adding that much debt. So that does not end well. And what has to happen is the Fed has to monetize that debt, because there are not enough private buyers out there to buy the amount of treasuries that the government is issuing.
And that's why we're talking. The reason I like your program, the Rebel Capitalist Show, I'm plugging your show not now, is that you draw pictures of what's called the shadow banking system. And I said we were going to discuss the repo market today, because that's what happens when the Fed, the Treasury, took over the whole system. So it's now 100% manipulated. But I think this is what Buffett's looking at, is the red lines here, is we have to keep printing money, right?
Well, it's not just printing money. So let's unpack that a little bit, because I think that's a very, very key issue. So when most people think of, quote unquote, printing money, they think of the Fed just creating bank reserves. So let's call it quantitative easing. I'm sure most people have heard that term. That's when the Fed creates, I call it funny money. It's just out of thin air. It's just digits in a computer. And they use those digits or those new currency units to buy treasuries from the banking system, from the primary dealer banks. That's typically what we call quantitative easing. And most people would call that money printing. But the key there that most people don't understand, those bank reserves really aren't legal tender. So you've got two types of money supply. You have base money, which is the bank reserves held at the Fed, and you have broad money. That's the amount of currency units that are circulating within the economy. You see, so when most people think about deflation or inflation, they're talking about the amount of broad money in the economy that's chasing X number of goods and services. You see, but that doesn't necessarily, there's not a causal effect necessarily with the amount of base money and broad money. What has to happen is the commercial banking system is the transfer mechanism. And what I mean by that is the Fed could create, let's say, $1 quadrillion in bank reserves, and it might not create price inflation in the real economy. Most likely create financial asset inflation, but not your grocery bill might not go up. But what happens is the commercial banking system, that increases the capacity they have to create more loans in the future. And if they create more loans, then that increases what they call M2 or broad money. And that could create consumer price inflation, because then you have more currency units that are chasing the same amount of goods and services, if not a lower amount.
You're talking about inflation, and that's the argument that Schiff and Records always get into. What is inflation?
So for the average viewer, the person that's watching this or listening to this right now, what this all means is right now the Fed is starting to create broad money. They're starting to create more currency units, and
George,
this is going to be inflationary.
We hear you. Will it fix the problem?
No.
That's
this
the
will
answer.
No, this is going to.
See, understand here, you cannot print money when the real answer is we have to produce.
That's right.
Okay,
That's
so
right.
please, we only have a few minutes with you, so this is not a whiteboard presentation here, because I'm going to sit here and go nuts with your charts. But your opinions at this moment as to where we're at, what does Buffett see? And that's why your chart here on this one here is kind of what I suspect Buffett sees. We can't get out of this. We're going down.
Yeah, he sees that, and he sees money printing, and excess money is the only way out. Therefore, buy gold.
Yeah, but we're going down.
Yeah,
we have three options. Either we tighten our belts and produce, we go to hyperinflation, or go to war. These are your very words, and I agree with you.
Yeah.
So we can summarize that. I think we're already at war. It's called Portland and Seattle and Chicago, New York, and San Francisco.
Yeah.
Anyway, that's really what it is, because this is not a lecture series right now, because I just want to know summarize your valuable input. Okay, why is Buffett dumping banking stocks, dumping airlines, and buying Barrick Gold? And he's probably bought other things today also. So we come back, we go on with George Gammon. Again, his program is The Rebel Capitalist. Does fantastic whiteboard programs. He's always talking about, such things that people cannot see. It's called the shadow banking system. And today we're going to talk to him about the repo market, which caught fire on September 19th, 2019. That's when the real problem started. But today, when Buffett is selling airlines and bank stocks and buying gold, that's more current. So we'll be right back with George Gammon. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes or Android or YouTube. And please leave us a comment anytime you listen. All of our programs are archived at TheRichDadRadio.com. We archive them because we're purely an educational program. We make no recommendations. We don't tell you what to buy, sell, or hold. And then you can make up your own mind. So the reason we archive our programs at Rich Dad Radio program is if you listen to this again, you'll learn twice as much. But if you ask your friends, family, or business associates to listen to this program, you'll learn even more if you discuss it. So today's program is a very important program because Buffett, who has badmouthed gold for years, and it was tough, because what Charlie Munger says, it says, I can't imagine a worse, his partner, Charlie Munger, who's 96, I can't imagine a worse crowd to deal with than a bunch of gold bugs. And I've been a gold bug since 1972, and I've been a silver bug since 1974. And the point here is this, Kim and I just held our course. We'll let these old guys tell us all this stuff, but we still have to have our own belief in yourself here. So now these two old guys, 90 and 96, they're eating their words. They're 560 billion or 560 million, more than my number, to buy Barrick Gold. So they're shifting into gold, dumping bank stocks, even as J.P. Morgan and Goldman Sachs, and dumping airline stocks. So the question is, what does that mean about the future? What are you going to do? If I just tweeted this morning, if two old guys can change their mind, what are you going to do? And we're talking about, what does this mean? Any comments, Kim?
Well, we at the Rich Dad Radio Show bring on people that are smarter than us, and we have that guest today with George Gammon. And he looks at the macro, and he keeps it simple, and he uses pictures, and he's a real estate investor, entrepreneur. But at the last segment, we were talking about different scenarios of what can happen, which direction we can tighten our belt, we can go to inflation, we can go to war. So, right. George, what give us your overview picture, your opinion. What do you see? Where are we going globally?
Well, if history is any indication, the government will choose inflation out of those. So if we look at what the average person can do, you see that in times going back to the early 1970s, as an example, you see a rotation out of financial assets into hard assets. And I would use the stock market crash of 72 to 74. And then you had this huge commodity boom in the 1970s. I think that's what Buffett is seeing. And I personally, that's how I'm positioning my portfolio. And there are no certainties, but I think that if you look at the probabilities and you understand what's going on, that's the most likely outcome when all things are considered, when you look at the amount of government debt we have, and you look at how much deficit spending they're doing right now with the stimulus packages and infrastructure spending and everything else that we see in the news right now.
Munger says, I wouldn't hang out with a bunch of gold bugs. Well, I wouldn't hang out with those guys either. My friend just loved to go to Buffett's annual Love Fest. I don't know, it's in Omaha. I got nauseous thinking about it. Simply because, George Gammon, Kim, and I, we're investors. We don't want two old guys managing our money, because when they lose our money, and they have lost their money, we don't know anything. Do you know what I mean? If I lose my money, I have a chance of getting smarter. That's my message.
Right.
But if you turn it over to a fund manager or an ETF and all that stuff, you don't learn anything. But the other question is, one of the things that Buffett called Bitcoin rat poison. Now, he hasn't, I don't know if he's bought Bitcoin yet, but what's his name? The guy?
Paul Tudor Jones.
Yeah, Paul Tudor Jones is a pretty smart dude. The point here is this. The old guys are changing their minds.
That's right.
And the young guys have already changed their minds, because I was talking to my friend. I said, Kim and I grew up playing Monopoly with fake money, and the millennials grew up playing with cyber money. So we have two complete generations coexisting. We have old guys who buy treasury bills. I won't touch those things either, but I have gold and silver, so it's hard for me to hang on to gold and silver when Munger and Buffett were trashing it. And now I also own Bitcoin because Paul Tudor Jones owns it. But because the millennials grew up with cyber money. So the reason I'm talking to George is because you're an expert on the past, but I want to know because you're hanging out in St. Bart's, also, obviously you see something. I want to know what you think about that. If Buffett says Bitcoin is rat poison and he calls gold worthless, and Munger wouldn't hang out with a bunch of gold bugs and I wouldn't hang out with him, dial that into your brain. What does that say to you?
Well, it says to me, you got to listen to, or you got to watch their actions and not listen to what they say first and foremost, because regardless of what they're saying, if they're out there buying a gold miner, and I'd like to point out too, Robert, they're not just buying gold, they're buying a gold miner. So why is that different? Because when gold goes up, gold miners go up a lot more.
Right.
And when gold goes down, gold miners go down a lot more.
Explain that. What do you mean by that?
Well, let's say gold goes up by 10%, or let's say it goes up by 100%. It's maybe 2,000 right now. Let's say it goes up to $4,000. So it goes up by 100%. If that were to happen, most likely the gold miners would not go up by 100%. They'd go up by 400%.
There's more
They'd go up
leverage
by
in it.
1,000%.
Yeah, there's more leverage in gold miners.
That's right. So you have to look at Buffett not only buying gold, going long gold, let's say, but he also is going long gold with leverage. And I'd also like to point out, you said about 560 million, but that's all we know of. And he's not going to buy at one time because he's going to move the market. So since then, Robert, he could have bought a lot more that we just don't know about yet, that we'll find out in the future.
So George, this is my point. The reason you're on this program is dialing into your brain, because this is what Rickards calls Bayesian. You know, you can only make a decision based upon what's happened. And when something changes, even Keynes, the economist, said that he'll change his mind when the facts change. So the facts just changed, is that Buffett just started getting into gold, dumping financial stocks and airline stocks. So that's Bayesian would say, what would you do now? So you hauled ass to St. Bart's, which I think is smart. And if you were speaking to our listeners right now, or viewers right now, if two old men, 90 and 96, can change their minds, and we have people sitting like, Harry Dent's recommending T-bills, and we have all of this. I see your face.
Well, Harry Dent's saying gold is going down to 1,000, right?
Yeah, and Rickards is calling for.
Because I'd love to buy more.
Buy more, yeah.
So Rickards is calling for $15,000 gold, and Schiff is nuts. I interview all these guys, and you're included now in the rat pack there.
Yeah.
We all value your opinion. The facts are the facts. Right now, this is Bayesian. I mean, Buffett dumped financials, and he's buying gold. So dial that into your brain. What does that mean to you? What would you say to the listener right now, the Rich Dad fan?
I think, I don't like to say it, but I think it's just factual that we're going to see a lot more political unrest. We're going to see social unrest. There's going to be a lot of volatility in our society, in the developed world. And that means it's good for gold. I mean, we talk about inflation all day long, but gold does well in a lot of different situations. And especially when you have a lack or loss of confidence, not only in fiat currency, but in the system in general. And so I unfortunately, I mean, I hate to say it, but that's what I see in the future. I mean, I was just in the United States for a brief period, and I mean, people were angry with each other. They had all these plexiglass up at the restaurants at a curfew at 10 o'clock in Florida. And I went out of my hotel without, I had the mask just down on my mouth, right? And I was walking out of the hotel. Some guy that's 30 feet away from me is screaming at me to put the mask on. I mean, this is a divisiveness that I have never seen in American culture ever. And I don't like that. I don't think any of us really like that. But if you really kind of are honest with yourself, I think it's going to get worse before it gets better. And if it gets worse, especially with fiat currency, you're going to want to own something that's not only a hard asset. I mean, I really like commodities right now. I think they're extremely cheap.
And what other commodities, George?
Copper.
Agriculture. I like oil. I think that copper is very interesting right now. I think uranium is interesting. But also when you look at gold or silver as just money, you want to own something that's held its value for over 5,000 years. Then you're talking about Bitcoin. Wouldn't that be really interesting if people move more and more towards Bitcoin like they have in China and in Venezuela, where they lose confidence in the system or the currency? But the really cool thing about Bitcoin is you've got a fixed number of units at 21 million. And I would argue you're going to have fewer and fewer units because people always lose them.
So Schiff lost his money.
Yeah.
Schiff lost his and immediately. He doesn't like it. He calls it rat poison too.
Yeah, but it's this money supply that's shrinking instead of this fiat currency that's expanding exponentially, like we showed on those charts. So,
okay, so George, let me ask one more question. So
yeah.
Harry Dent, who's an old guy like me, like I said, we grew up playing Monopoly and paper money, and I've never trusted paper money. That's why I own gold, silver, and Bitcoin. Kim and I have lots of gold, silver stored all over the place.
Yeah.
We don't have paper. Now, a guy like Dent, who's an old guy like me, he says buy treasury bills, and I saw that little smirk come across your face because you're kind of in between us. Look, we're not saying any of us is right. I just want to hear your opinion. So Dent says buy T-bills because they're a lot safer than gold and silver. What do you say to that?
Here's the problem with that mentality, in my opinion. I've got a ton of respect for Harry, but I'll disagree with people if I disagree. And I think the problem with that thinking is you're trying to predict what's going to happen with the price in the future instead of right now looking at the landscape and just saying what's cheap and what's expensive. And like Jim Rogers always says, if you just buy things when they're cheap and sell them when they're expensive, or just buy low, sell high, at the end, that's what we all want. And that's how we're going to be successful. You don't get too cute with it. It's the KISS formula. Just keep it simple, stupid. And if we just keep it simple and buy what's cheap and buy low, sell high, and what's cheap right now is gold, silver, Bitcoin, and commodities, and then we don't worry about the rest, I think in the long run, everyone, including myself, is going to be a lot better off with that type of mentality.
So personally, are you holding gold, silver, Bitcoin?
Not silver, gold, Bitcoin, commodities, uranium. And fortunately, I bought back in March. I bought a lot back in March. I bought gold miners as well. But I want to make a point there that even in March, I had no idea if they were going lower. I had no clue. In fact, I thought, yeah, they're probably going lower. I bought oil or some of the oil producers when oil was really crashing. And I thought, I didn't know it'd go to negative 40 a barrel, but I thought that it would go lower. But I still bought right then. Why? Because it was cheap.
So right? How do you buy commodities? Kim and I started a gold mine in China, which they confiscated, and a silver mine in Venezuela, which we still have. But how are you buying oil? Because we invest in oil producers.
The producers.
Oil explorers, should we say.
Yeah. Yeah.
Well, I buy copper and uranium and all that stuff. Yeah,
I'm not buying the actual commodities. I should have made that clear. I'm just buying the producers. So I'm just trying to go long the underlying commodity or asset by buying the companies that benefit from that because they own those assets in the ground.
So George, do you produce a kind of an investment letter or something like that, giving your ideas?
Well, I'm trying to take my cues from you, Robert, and I've got people. I don't know if I call them rich dad advisors. I don't know if I'd Rich George advisors, maybe. I'm not sure. But I'm like you. I almost flunked out of high school, but I did very well in business. I was always on that side of the cash flow quadrant and the business and investor. But I know that one of the reasons I was successful is because I surrounded myself with people who were a lot smarter than I was, and I would leverage their skill sets to make me more money.
Final question is this. You made a lot of money in real estate, didn't you?
Yeah.
Are you still in real estate?
Absolutely.
What kind of real estate?
In cash flowing linear markets, I call them. And I go into single family homes. I haven't gone into multifamily, but just very simple, nothing glamorous at all. I own a few properties in Medellin that are higher end, but that's because I bought them so cheap that the cash flow still makes a lot of sense. But that's what I'm doing first and foremost. But I go to a guy named Chris McIntosh with Capitalist Exploits. He's got a research letter called Insider. And that's how I leverage his skills. And that would be my Rich George advisor that I use for the commodities. For real estate, I consider myself to be an expert. So I make all my own decisions there.
So I have a final question. I don't know if you have an opinion on this. I'm sure you do. Election coming up. You got Trump versus Biden and Kamala. What happens if Biden wins? What happens if Trump wins? Any opinion on that?
Well, Biden wins. You're looking at taxes going through the roof. You're looking at capital gains probably going to income. You're looking at corporate taxes going up, which will have downward pressures on the stock market. Regardless of who wins, though, it's fantastic for what we just talked about. Because regardless of whether you're on the right or the left, the one thing they all have in common right now is they all want bigger government, they all want bigger deficits, and they all want money printing. They all want inflation. So regardless of who wins or loses, I think that's what we're getting down the pipeline.
That's the left, right? That's the Democratic left side, the socialist side. That's what they want.
They all want it. It's just to what degree. Yeah. Trump wants deficit spending. I mean, he's the same, big government type of person. Now, you could say he might be better or worse. I don't really have an opinion on that. But regardless of left or right, I think they're bigger government. They're more deficit spending. It's just a matter of to what degree.
So anyway, I want
So I might come visit you at St. Bart's.
Yeah,
I might be visiting soon.
I hope airlines are still flying there. Yes. But anyway, I want to thank you, George, because I'm sincere when I learn from George Gammon. I watch his whiteboard presentations and I blow my brains out afterwards. But anyway, you're one of the smartest guys in YouTube social media I know of. And you explain the invisible. That's why I go to you. That's why I'm kind of cutting you off here, because you go into the invisible. I'm going to lose money. I don't like losing money. So I would rather have him go to the rebel capitalist and learn from George Gammon and his whiteboard, and your knowledge is impeccable, your accuracy is impeccable, and your forthrightness is worthy of listening to. Any comments, Kim?
No, I just thank you, George. Thank you. And I really want to recommend people listen to your podcast, The Rebel Capitalist, because it is, you explain it so well and so simply, and using other experts as well in your podcast. So I really want to recommend people listen. If they really want to get educated, then go to The Rebel Capitalist. And I just thank you for all your expertise. And
I sincerely appreciate you guys having me on. It's always a pleasure. I always love talking to you.
Yeah. And you put the invisible into pictures. And I love that. So that's why I learned so much from you.
So enjoy your cafes and your gyms and your non-masks and all of that in St. Bart's.
If you see Kim and I walking around, we took your advice. Are you going to buy a place in St. Bart's?
I doubt I'll buy a place here. You know what's interesting though? The prices here are extraordinarily high, but the rents are they actually make sense, believe it or not. I mean, you can get about a 1% RV ratio here if you do short term, if not more, which is what I could get back in Kansas City or something like that back in 2012, 2013. It's just here, you're not going to get a house for 100 or 150 grand. Here, you're forking out, 5, 6, 10 million for a place. But it's an interesting market, that's for sure. But you know where I'm going next for real estate specifically is Dubai.
Really?
Yeah.
Really?
Yeah.
Why Dubai?
Well, Dubai, because it's getting cheap. If you look at their prices, they really peaked out in 2015, and their prices have just been going down, 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 down. Now they're under the cost of construction in places like the Burj Khalifa, which is the tallest building in the world. So you get this landmark real estate where you can buy under the cost of construction. Same thing in Puerto Rico. You've got all these people coming there because of Act 20 and 22, all these rich guys and gals. And if you can go there, their property prices are really getting hit, and it's dollar denominated. So you don't have any currency risk. You can get great rents right in Condado, right on the beach, and they've been hit with their bankruptcy. They got hit by the hurricane, and now they're getting hit with COVID. So there's blood in the streets right there.
Trifecta, yeah, no kidding.
Yeah.
Hey, George, you know what's funny is that I'm always giving Schiff crap because he's so opinionated.
Yeah.
So he was in Connecticut, and then the hurricane hit him there too. I said, Peter, I'm not going to hang around you anymore.
Yeah. He's like that character on Charlie Brown. It's always got that
dark cloud.
Yeah, stay away from Schiff.
It's so funny because everybody has their opinion, and that's what I want to hear the logic behind the opinion. Does that make sense to you?
Yeah.
Because how did you get there? Like records, like when I don't know if you saw records and Schiff get into it about what is inflation. It was interesting.
Yeah. It's I still think they're just going back and forth over semantics, and it's just that, whether today's definition or yesterday's. I think what really matters to most people is our prices going up or down. They don't really care about a specific, Oxford dictionary definition or the Austrian definition or the Keynesian definition. It's just, is my rent going to go up? Is my grocery bill, is my health care going to go up? Or are asset prices going to go down? Are they going to deflate? Right. And that's what most people are getting fixated on for obvious reasons.
And so that was Rickard's kind of point of view is that, Schiff says it's just the amount of M2 in the money system. And Schiff says, and so Rickard's just saying, no, is what are they chasing?
Also too, when they came out with that definition that Peter references, that's when they believed that velocity was consistent.
Yeah.
So there was a 1-to-1 ratio there. So as an example, in the 1970s, when Milton Friedman was, he always came out saying that velocity was consistent. It's one of the mistakes he made, which he corrected in the 1980s. But so what would happen is as the base money increased, then nominal GDP would increase at the exact same rate. So they always figured that that it was a 1-to-1. And Lacey Hunt actually talks about that. But in the 80s, they found that wasn't true, that just because the money supply went up, velocity could go down at an even faster rate, which might not translate into consumer prices. So,
but also when you look at what's going on in our cities with the migrations, people leaving.
Yeah.
That affects price too, right? It's not just you can flood all you want, but they're leaving. And did you hear about the wealth tax that California is proposing?
Yeah, was it like a 0.4%, like an exit tax almost?
For 10 or 20 years or something?
Oh, yeah, I think it's going back, isn't it? It's retroactive?
Retroactive to 2019, I think.
But if you leave, what is it? If you move from California, you still have to pay these California taxes for 10 years, even though you're not there. It's crazy.
See, my concern is they do that in the United States. Obviously, it's very concerning. They're even talking about that in California. But if we keep increasing the debt by $4 trillion a year, and we go up to 220 trillion or 220% debt to GDP like Japan, what do you do? I mean, all the producers, you guys, me, everyone else, we're going to pull the ripcord on the U.S. and say, you know what, you're not taking my taxes up to 90%, or even with real estate. Who knows what they do? Maybe they don't allow depreciation anymore. I mean, I wouldn't put it past them. And then what can they, how do they keep you in? They've got to put up like an electronic or a financial Berlin Wall.
Yeah. Well, George, in Hawaii, we have a place in Hawaii which we're about to sell. One day we get a notice just out of the blue. Oh, well, sorry, because you're a non-resident, your taxes just tripled. Your property taxes just tripled.
Wow.
Just overnight. Overnight.
Yeah, see, because you're not a voter, basically, is what they're saying.
Exactly.
Yes.
Anyway, my friend, this is the most exciting time to be alive. I'm glad you're putting on the Rebel Capitalist Show, and I can refer people to you because I'm not going to take the time to explain the way you explain.
Well, I don't think you could explain it.
No, you can't. Okay, man. Thanks,
George.
Thank
Take
you.
care.
Bye, guys.
You're
Bye-bye.
amazing. You're amazing. Thank you. Bye. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And I want to thank George Gammon. Remember, his program is called The Rebel Capitalist, and he is, in my opinion, the best teacher in YouTube today because he takes the invisible, things like the shadow banking system, the repo markets, and he puts them into pictures simple enough for people like me to understand. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes, Android, or YouTube. And please, there's a comment after you listen. All of our programs are archived at richdadradio.com. And once again, we don't sell anything. We don't tell you to buy gold, silver, Bitcoin, ETFs, real estate, and all that. We're purely educational. So if you listen to this program again, just go to richdadradio.com. You'll pick up twice as much. But listen to this. If you share this video or this YouTube program or radio program with your friends, family, and business associates and discuss it, your intelligence will go quantum because when you share, you learn more. So anyway, that's why we do here. So any final words on George, Kim? He's the best, man.
So what I love about George Gammon is he is a rebel in the Rebel Capitalist. And you really do want to watch this show with your friends and family because George he looks at the macro picture of the economy, keeps it so simple, and he goes into the different scenarios that might play out. And in his opinion, which scenario will play out. And more importantly, where you should be putting your money today based on these different scenarios. So it really is chock full of really great information and things that you could do today to protect yourself with all the scenarios that are coming out of this crazy, crazy time. I like what he says in one of his videos. He doesn't call it coronavirus. He calls it cerveza. It's their cerveza thing.
So he's a fabulous teacher, and he goes into far more detail than I could ever stand to go into. So please watch the Rebel Capitalist. And one more thing that I want to make a big point here is we talked about, Warren Buffett had just turned 90 and Charlie Munger 96, and they changed their minds. They trash gold and silver. I think Buffett owns silver because it really is a commodity, a true commodity. But Munger is 96. The point is these old guys change their minds. And that's one of the most important things about the Rich Dad Radio program. We want to bring all the different people in with their different points of view.
Everybody's got a different point of view. Everybody's got a different opinion.
And then you make up your own mind.
Yes.
Really, that's really what it's about. If you agree with, Charlie Munger and Buffett that, Bitcoin is rat poison, then don't buy it. But anyway, that's what we're here for, is you listen to other people's points of view, but then trust your own. Thank you for listening to the Rich Dad Radio program.
Thank you.
và diều đã bóng nắng cháy giữa đồng kỷ niệm yêu thương trong mỗi ngày tiếng ru gọi hãy nhớ biết bao tôi xa quê bao năm tháng qua nhưng trong trái tim không bao giờ xa lời mẹ ru con hiu hiu chưa hè mùa lụt nước lũ bắt